If you want to trade gold profitably, these are top gold trading tips for 2024. Don't forget to subscribe to this channel and follow us for more content like this. Now, gold, it has been proven to be a safe haven, especially in time of inflation. And a lot of traders love gold because of the high volatility that we've seen in the market. So these tips will help you to be profitable and also be in the right direction whenever you are trading gold. Now, the first tip is gold always follow the mass psychology in the market. Okay, so because for every movement in the market, there are psychologies that are seen along the line. And when we have the mass psychology, is where the market is consolidating. Take a look at what the market is doing. We see an impulse here, we see a correction, we see an impulse, we see a correction, an impulse, a correction, and stuff like that. So for every move you see on gold, there are decision moments. And this decision moment is where investors capitalize. All right. So, and these decision moments create a bias for the next move. Now, a lot of traders are screwed because they are trying to catch tops and bottom. But investors and smart traders, they focus on this stage where the market is deciding what to do next. For instance, if you take a look on what the market says here, an impulse is created and a corrective stage, and this is a decision moment whereby the sellers and the buyers are negotiating where next should we push the price. Okay, after this sharp sell, the buyers say no, we want to push it up, and the sellers create this sign and the buyers push it up again. And at this point in time, he has given us a bias by creating a pattern, and this pattern keep repeating itself in every market. So this pattern is what we call a regular flat. So at this point, the buyers will start giving up because the market has created a pattern where the mass psychology will go. This is one of the secrets of trading gold profitably. All right, so we come here again, we see the same thing playing out. An impulse down, the market creates a pattern here, and once this pattern is seen, the sellers will say, okay, we are taking over, and there goes. So a pattern is created by both parties, the buyers and the sellers, and the most important thing you need to focus your attention on is who actually started this move. Okay, so the person that starts the move always win. So if a buyer starts a move and there is a consolidation stage, at the end of it all, the buyers will win. Okay, how do I mean? Now, assuming this is a move here, this is an impulse move here. So the buyer started this move and there is a consolidation phase here. So this a consolidation phase is a negotiating time where the buyers and the sellers are struggling. At the end of it all, the buyers actually win. Also, the buyers actually created this. Now, at the negotiating price, the seller now create their own. So a negotiating price now starts. Now for you, I'm using this word, negotiating price, negotiating time to indicate consolidating phase. All right. So anytime you see a market in a sluggish move, up, down, not going anywhere, is that phase of consolidation. Now, over 80% of the time, the markets spend doing this. Okay. So once you look at this kind of phase, you need to go back to see who actually started this move. Now, if it's the buyer, for instance, here we saw that the buyers create their own, the sellers now create their own. It was sharp. So there is a negotiating phase here. At the end, they need to settle these sellers here by creating this one. Thereby, at this end, the buyers will now win. So the importance of you identifying or recognizing a pattern is a game changer in trading gold. All right, because this keep repeating always in the market. Okay, so that is how the first tips of trading gold, ability for you to recognize a pattern. So there are 4 basic patterns we trade on gold. Okay, I will just rush them here. The first one is impulse correction, like this. This is called a regular flat. The second one is an impulse sharp down, This is called a running flat, just like what we saw here. Okay, the third one is impulse, sharp down. This is more of an expanding flat, whereby it doesn't break this beginning, this beginning of the trend. Okay, so this is just what we look at anytime we are trading gold. And believe you me, you'll be more right than wrong when you begin to identify this move, these negotiating patterns. Okay, and this pattern creates the move. So these are the first tips that gold follows. Now the second one, gold love break and retest. Okay, if you are trading gold over time, you will understand that you will always see break and retest in every market. Okay, we have a break here, we have a retest here, we have a break here, we have a retest here. So as the market breaks up, we always have a retest. Everywhere you see that, it might not be that perfect, but it keeps happening over and over, because it's a time to confirm, okay, now we have surrendered to you and we're now going to move in that way. Okay, the break, the retest. Now as that retest, the sellers is coming, it's okay, good, now let's move in the buyer's direction, and that bias is created. So break and retest is seen often in gold pairs, irrespective of the time frame you are trading. Break and retest, you always see that playing out. Now the third tips is third trend line touch. Now the psychology behind that is that when a market makes an impulse, it makes a correction, it makes another impulse, okay, and it starts coming down, making another correction. See, the second impulse establishes a trend, whereby you draw your trend here. So anytime the market touches this trend, that means this is touch 1, 2, and 3. So at this third time, it's touching the trend. Because it has actually created a trend here, then there is a tendency for high reaction. The market will always react positively, especially whereby the market is trending, or otherwise in the other way around. Okay, so this have seen over and over in gold markets. So I will show you some examples here. You can see example here. We have a first touch here, a second touch here, and a third touch here. All right, and after which the markets went up. Now you see the same thing apply here: the first touch, the second touch, the third touch. Now you can also see it here: the first, the second, the third. Anywhere you see gold movement, you can position yourself, because you know that, draw your trend line and follow suit. All right, so we see more of that third trend line touch. We have an first touch, second touch, and third touch. Okay, so you can backtest it for yourself to see how often this happens in gold chart, and you'll be amazed that, well, if you focus on this only, you'll see how far you will go in your trading gold, because you'll be more right than wrong. So these are the top 3 gold trading tips that will help you to be more profitable in trading gold. Now, if you like this kind of content and if you want to learn more of this, kindly subscribe to this channel, follow us on this platform, share the video with your friend, and stay tuned for more content like this. Thank you.